So I'd like to introduce Fred Davidson, the president of Energold Group. And Fred, thank you for joining us. I understand you're out at a conference today, so I appreciate you giving us a moment of your time.
That's all right, Robert. I appreciate your time.
So tell us a little bit about the business model for Energold and what business lines you primarily operate in.
Well, Energold is somewhat unique. What we work in is we see ourselves as international global drilling solution provider, and that is we're drillers, but there is a multiplicity of industries and activities that require drilling, and our job is to take on these projects with clients, develop the best and most effective method of drilling, and complete it. So an example would be we drill minerals in about 23 countries. We drill geothermal in the United States and Canada. We do water in the United States. We drill in the oil sands in northern Alberta and Canada. We do seismic work, and we do geotechnical work, as well as HDD, which we call horizontal drilling for infrastructure, and that is you want to put in fiber optics in the community. We do that drilling without disrupting cutting roads apart and everything else. We drill underneath the roads, underneath rivers. So our attitude is very much, you have a drilling issue, let us give a chance to solve it for you.
Okay, fantastic. So you guys are very regionally diverse. I know that you have drilling rigs up all over the world, and that you offer drilling not only for the mineral sector, which is where I think people traditionally think of drilling companies operating in, but you do other projects as well, like you mentioned.
Sorry, go ahead.
Well, I was going to ask if you could talk about your hydrovac segment. This is, I think, a newer segment that you guys have started that you're excited about, and speak a little bit about that and what the prospects are for that.
Yeah, the hydrovac is sort of tied into that horizontal drilling, and more and more we're seeing a demand in places like the United States, Canada, and interestingly in some of the Americas, where we basically will drill under roads and what have you, and put in the services underground as opposed to surface. One of the things that they require with the hydrovac is that you don't want to put a backhoe in there to dig down in a vault when there's other pipes and services in there, because you can easily break them apart. What a hydrovac does is it flushes the area out with water, and therefore doesn't damage any existing pipes. And so we do that for our own HDD purposes, the horizontal drilling purposes, but we also service other parts of the industry where people are doing geotechnical studies in cities where there's an issue of problems with ground conditions, what have you. The hydrovac system tied in with the HDD was relatively small, virtually non-existent 2 years ago. It's probably one of our most rapidly growing areas, and where it was zero revenue 2 years ago, it's probably close to $10 million, $8 million this year in revenues, and we expect to see that sort of growth again next year.
Okay. Yeah, I was looking at your quarter two results, and it looked like you reported a sizable increase in revenues from 2017 year over year of 34% to $23.8 million. Why such a large increase, and where primarily is the new revenues coming from? Is it? I know that you mentioned hydrovac. How are your other business lines doing as well?
Yeah, we've actually seen sort of a year-over-year increase now from 2016. Similar increase to 2017, a little less, and we're seeing the momentum build. While we're seeing growth in the mineral side, and it's definitely there's some interest there, we're seeing far more growth in the other services areas. Ground loop geothermal, we're doing schools, military bases, universities, industrial sites, where people are recognizing that, I'm not sure if you're familiar with ground loop geothermal, but very simply, we drill holes in the ground, we put pipes in there, we're circulating fluids through the ground, and that picks up the latent temperature of the ground, and then it's taken, radiators, and in the summertime, in a place like Texas, you get air conditioning because it'll bring it down to the temperature of the earth. And in wintertime, you get a heat lift to the point where you only need a few increments in temperature to provide comfortable heating. It's a very effective system. We're seeing huge growth in that area. We're seeing growth in oil sands. In 2016, the price of oil had dropped to about $30 a barrel. It's now back up to in the $70 range, and the work that we didn't do before, we're now doing. So there's significant increases there. Geotechnical, same thing. So we're seeing probably the most dramatic increase in the non-mineral area, although we're seeing healthy increases in the minerals as well.
Okay, great. At the same time, I think that you reported that your gross margin improved to 16% in the same quarter compared with 10% year over year. What changes did you make that improved that so positively?
Well, we certainly implemented internal or tougher controls on costs. We did see that in response to the increased demand out there, you can bump up your prices a bit. The 16%, although it was a nice increase over 10%, represented actually a little below our target number because we'd started up two fairly large projects in the second quarter. And generally, these projects are negative in the sort of startup phase, and then they go positive as you get working on the project. So the year was over 19%, and I'd expect that that's what we're going to see for this year, somewhere around 18-19% for the year in total. Cost control, increased demand, and some of their diversifications worked very positively for us.
Okay. And you mentioned that the margins could be a little bit higher except for some big projects you're starting up. Do you see a little bit of pressure when you're starting up a big project and it takes a little bit more initial expense?
Yeah, when you take these big projects on, it's almost, if you will, like a bit of a bell curve. And when you start at one end, it's the shape of it at least. There's all the startup costs, getting familiar with the client, getting familiar with the site, getting familiar with the ground conditions, etc. And then we get into, to use the tennis analogy, the sweet spot, where everything's ticking along very nicely. And the longer that sweet spot is, the better the margins get. And then toward the end, you run into the other issue of demobbing part of your facility, cleaning up, what have you. So quarter by quarter is very difficult to measure in our business because you can have a big project like that will affect the quarter. But for the year, it can be fairly dramatically and positive growth in certain sectors where it's a bigger contract.
Okay. And you mentioned earlier the mineral drilling had picked up largely because oil price had increased up into the $70 price range. Do you expect that to continue in 2019? And also, are there other components to your mineral drilling that could increase as well, such as the precious metals or the base metals?
Yeah, right now we're seeing, we generally, in what we're doing in the oil sands, is we do winter drilling. It's basically drilling for an open pit, which is very much like the mineral side. We've been told, and it's anecdotal at the moment because these contracts are always open, we expect about a 40% increase in our oil sands drilling. On the mineral side, you're right, it's sector by sector. There's certain metals are not that popular. We are seeing an expectation out there from certain of our clients in specific minerals. For instance, lithium is very busy for us. The precious metals, I think, are on their heels a bit with the price of silver and gold. But from what we're getting from a lot of our clients, they think we've achieved a bottom, if you will, and they're expecting to go on towards a bit of strength towards the end of the year, especially if you're drilling outside of the United States, because gold and silver, of course, is quoted in U.S. dollars, and there's a strong U.S. dollar, and the local price becomes quite a bit higher when you're working in some of these other countries.
Yeah, that's one thing that we've noticed. I think the price of gold and other currencies has risen a little bit more than the U.S. dollar, so that does make sense.
Yeah,
So,
it does. And the advantage, of course, working in those countries is their costs are getting pushed down a bit. So it does improve the margins as we go forward.
okay, great. I want to switch gears for a moment and talk about your manufacturing division, Dando Drilling. Can you speak about the process you use to streamline activities and bring that division into a positive operating margin for the year?
Yeah, for a long time, there was two things. One, did a extensive R&D work there. The idea is to take that equipment into sort of the 21st century. And that cost us money, there's no question about it. The other side was they were traditionally manufacturing everything in-house. There was some concern about reliability of suppliers, etc. What we've done is we've taken that approach from the automotive industry. We're happy with our R&D. We're going to continue that. We're happy with our marketing, but we're doing more and more. We're contracting out some of the sub-assemblies and then simply bringing it in and doing the actual assembly work on site. And that allows us, although we're not doing it extensively, that would allow us in the long term to use less expensive marketplaces to manufacture, like in Mexico, what have you, to manufacture the sub-assemblies and then literally build it on site in the UK. The strategies worked. We are looking, however, at ultimately divesting ourselves of the manufacturing side. Only because it requires a fair degree of working capital. You need rigs sitting on the floor as display rigs, and these rigs are not cheap. And secondly, when we do take on contracts, they're $1 million, £1 million contracts, and you might get a 30% advance, but you're going to cover another 40% in costs of actual rigs. So it's one of those that's really demanding on working capital. And with the pressure we've got overall with the growth, one of the big issues you do run into is when you're growing from 65 million to say, let's say 95 million this year, that's $30 million of growth, and you've got to finance that because the average client pays about 120 days or more. So we've literally had to come up with cash of $10 million to finance that growth. And Dando tends to be one of those where that period of collection periods goes up to the 180 and almost 200 days.
Right.
That's one of the higher sort of cost issues we have with Dando.
Okay. Oh, interesting. I think we originally spoke about your approach to drilling at the Vancouver Resource Investment Conference earlier this year. And I found it very interesting the way that you guys deploy your rigs and is a little bit different than some of the other companies and maybe that investors would be aware of when they think of drilling. Can you explain what are the advantages of your approach in terms of how mobile it is and how you're using local teams? And how does that help you in your relationships with your clients when you're doing the drilling projects?
Valid question. Yeah, I mean, call our rigs modular rigs, and the whole idea is we've taken the approach that a traditional rig is a big chunk of metal. It's got to be dragged into a site on a road, dragged by a cat, or moves in on its own. It occupies, first of all, you have to create the road, which creates quite an environmental impact. It creates social issues too, because when you drive a road through somebody's little farm, even if you compensate them, they're not very happy puppies. And the rigs tend to be fairly complex, which means we have to import most of our drillers and helpers to do the work. We looked at this about 12 years ago and decided this is just not a model that works in most countries outside of, say, North America or Europe. And so what we did was we took approach of a rig that can be literally taken apart in modules. And rather than requiring a road bend, we can employ the locals to bring these modules in their traditional ways. They do it along their traditional trails. The heaviest module is maybe 350, 300 pounds. The majority is a lot less than that. And that 300-pound module is carried by multiple people. So that did two things that we thought would dramatically improve our relationship with these communities. one that meant we didn't create a mess, an environmental issue. Two, because the rigs are generally smaller than the traditional rigs, the actual drill site is substantially smaller, so again, less environmental impact. But more so, you're employing the locals, and they bring in the rigs. Because the rigs have been simplified, they can help operate. They don't actually operate. We'll have two of our own people, but vast majority of people we employ will be moving the rigs around, bringing supplies in and out. The whole community becomes involved. So when we go into an area, then they see immediate benefits as opposed to promises, and those immediate benefits are complemented by programs we run for health and safety in the local community, etc. The end result is we're the first guys in, other than the geologists who asked us to break rock there. And if the mining company, we've already set a positive precedent, and that makes it much easier for them to keep that relationship with the local community. Emphasize we do want to involve them positively, and at the same time minimize any environmental impact. It's a real win-win from the community and for our clients. It doesn't hurt too that, in fact, by doing it this way, permitting issues are a lot less because you're not permitting a road.
Okay, fantastic.
So the result is the overall program is much smoother, and quite frankly, when you add in the cost of a road, a lot cheaper. That means you can go and explore more properties, alienate less people, if you will, and at the same time provide a positive impact in the communities you're working. It's worked very well for us. We've been literally, these rigs are designed that we can fit them all into a 20-foot container with supplies. We can move ship where in the world, and we can drill for those people very quickly on a timely basis. The rigs are quite powerful. For instance, rather than one big engine, we use 3 or 4 small engines that are all in sort of parallel. And functionally, they work the same as any conventional rig. It's just we pull them apart.
Okay. Have you noticed your competitors taking a look at what you guys do? And has anybody tried to mimic what you do? And if so, do you feel like anybody's having any success there?
Yeah, unfortunately what we do isn't patentable, it's proprietary. And yet people do mimic us. It's one of we literally had to sell this concept to our clients, and in the process of identifying it to our clients, obviously the competition picked up on it. They're a lot slower to respond than I expected, but they are responding. Mm-hmm. And one of the things we try and do, and that's why I mentioned the R&D with Dando, is we try and keep ahead on R&D and in the technology. And the other side we do is although people sort of mimic the rigs, they don't mimic the social impact we try and maintain on the local community. So we're definitely leading edge on this. We've got imitators, and some of our imitators are quite good. And the technology has certainly been accepted now as a standard in the industry, where 10 years ago, 12 years ago, it didn't even exist. So, okay. Yeah, it makes us work a little harder. Maybe that's good for us, keeps us lean and mean.
Okay. So this information is going to go out to the broader market, and there are a lot of investors maybe that haven't followed drilling that may be getting interested in that space. Is there anything else that you would want to speak to investors about in terms of the value that your company brings, or just any general comments that we haven't covered so far?
Well, I think we covered a good portion of it. Yes, we have the capacity, case in point. In 2012, we did about $120 million in mineral drilling alone. In about 2013 or so, we did about $50 million in the energy side. Right now, we have fairly low utilization of equipment, and should there be a response in either of those sectors, we're quite capable of handling fairly large growth in terms of equipment and logistics. So we're wide open for growth. Part of it, of course, is going to be subject to pricing of those commodities. And I'm glad to a degree we've diversified. We haven't taken away the potential of what we can do, but we've diversified some of our activity, recognizing that we're looking for a more stable marketplace in things like infrastructure and that. And I think that's complementing our activities. And part of the reason we expect to see a continued growth in the magnitude we're talking about.
Okay, great. And I know that we've also spoken about another company that you're involved with in Impact Silver, and I believe I'm going to be having a conversation with your CFO, Jerry Huang, about that in a few moments. Is there anything that you wanted to address there with Impact Silver as well, and how you guys have been doing the last year?
As you know, Impact Silver has been working in this district, the Zapopan district, now for about 12 years. It's a massive district. It's 353 square kilometers. It's been mined off and on well before the conquest by the conquistadors. The Indians were mining here well before that. It has a multiplicity of minerals, everything from when you're high up in the structure, high-grade silver. As you go to depth, you get into lead, zinc. As you go further to depth, you get into gold and copper. And today, we've literally just scraped the surface of what we're doing here. And I think that it represents a somewhat unique, although I've got to admit, it's an awful lot to chew for a small company. We've got a project here which is probably one of the big majors projects, and we've got a hold of it. And I think what makes it exciting is it is one of the biggest mineral properties, contiguous mineral properties in Mexico. Good place to work, and it's got some huge potential there.
Yeah, I know that that's a very historic mining district, and there were a lot of workings already in that district, as you mentioned, when you guys got there. Can you describe your approach of sort of working that district and how you do your drilling and exploration and your production sort of wrapped all into one process?
Yeah, we've actually invested several $1 million now in gathering all the data we can on this property. Back several hundred, a couple of hundred years at least, data. We invested it in a very powerful computer program, and the we've done to that. We've taken sort of the 40,000 foot look at the property through this system, where we can identify individual parts of, tell us where the high-grade silver is, tell us where the copper is, etc. But we've also got a team on the ground, and for instance, we've located old workings, or 4,500 right now. It's hard to keep up. We've located over 52 old, right back to the time of the Spanish, in the area. And that gives us the ability to get in, take a look at where they were mining and what they were mining. And what we're finding almost universally is the mining was done with two limitations. One, grade, and that is when you're hand mining and you're hauling things out by mule to a site maybe 12 kilometers away, you don't look at anything under a kilo of silver. If in fact you're not necessarily hand mining, but you're working, this is a fairly wet area, you run into water intake. The old leather buckets just couldn't handle the water that modern equipment can. So we found quite often the best lead for a new deposit is chasing one of these old deposits. And it's not unusual for us to find a kilo of silver in the floor going forward. What's also interesting is the discovery of a silver or a gold and copper district underlying this silver lead zinc district. It was apparently, anecdotally at least, from one of the geologists working in the area. This was the source, an area where it was called Villa de Oro, Valley of Gold, was the source of the gold that was going to Mexico before the conquistadors arrived. So huge potential, a lot of hand waving about. There's a real romance to it, but we've just started to scrape the surface, and any mining we do there is really designed just to subsidize our exploration program on this property.
Okay.
I'd say we probably explored 10% of the property at best.
Yeah, so it seems like there's a tremendous amount of upside, and I know that you're, as a producer, you're very highly leveraged to the silver price, more highly leveraged than a lot of other silver producers.
It's really dramatic, and as we all know, we saw an uptick in the price of silver a couple of years ago.
Yeah.
And the multiple is sort of the price goes up $1 and we go up by a factor of 10 type of thing. So yeah, we're one of the purest silver plays around. We do products like lead and zinc, and we try and modify where we mine, because we're mining from a series of underground mines. We try and modify where we mine depending on the value of the mineral we're mining. I.e., we go for what's the value of a ton of rock ahead of us, as opposed to necessarily it always has to be silver.
Yeah.
But traditionally, silver is over 90% of what we produce, and we're highly levered to the price of silver.
Okay.
However, we are starting to hit gold, and I got to admit I won't complain too much if we hit too much of it. I'm quite...
No, that's a nice addition to have. So, speaking of the market in general, I've recently written some articles for Seeking Alpha discussing the inflation-adjusted price of silver and gold. And I did a study dating back to 1970 using some alternative measures of inflation put out by John Williams, who's an economist with Shadow Stats. And according to his calculations, gold and silver are priced about where they were priced in 1970 dollar terms if we're looking at those inflation measures. So from a general macroeconomic perspective, it seems as like both gold and silver have a potential for a large upside in the future, especially if, you know, as this current bull market that we're in ages and we head into the next recession, that gold and silver will do pretty well here. So that's kind of my view on it. I didn't know if you had a general market view on gold and silver as well.
Yeah, well, mine would be very similar. One of the discordant things in the market right now is the ratio of silver to gold. Traditionally, it's been down sort of a 60 as a multiple of 60 for gold compared to silver, and even less than that. And now we're up in the high 80s, and that demand fails to recognize that silver is a much smaller market and hence more volatile. And I think that although gold will always be with us and people are always going to want it, I think the silver market in itself represents an opportunity not just for the demand of precious metals. Of course, silver is also an industrial metal. In fact, out of whack, if you will, the traditional pricing relationship to gold. And so I think you're right. I think we could see a fairly dramatic swing. And the swings in silver tend to be far more dramatic than they are gold when they do swing.
Yeah, I agree. And with that gold to silver ratio being over 80, as it has been most of 2018, historically that's meant that we tend to have a turnaround in that ratio. So I would expect that as gold rises, silver will eventually catch up with it and surpass it. And that seems to be sort of the general consensus of the gold and silver analysts.
Yep, that's our feeling now. When that occurs, at this point in time, I'm not sure, but we're believers in precious metals, quite frankly, and we're going to keep on working on the project that we've got in hand.
Yeah, and I know that you mentioned you have about 90% silver so far, but you also have a little bit of lead and zinc, and I know that silver price has fallen down the last few years, but during the same time frame, lead and zinc have gone up. They've appreciated. So how has that really helped you sort of keep afloat, even during a time in which silver price is not really has not been in a strong bull market?
Well, we produce a concentrate, and the concentrate for the silver normally reports to the lead concentrate. So we literally ship lead concentrate, which has high-grade silver in it. And the end result is we are getting boosted in terms of the lead as we go forward. Now, we have certain areas and certain mines in our district have zinc in them as well. The problem, and of course we always run into this when people ask, well, why don't you just mine the higher grade here or do that? Mining is a fairly complex industry. And to go into a zone that's say, has higher silver, or rather zinc, costs money and takes time. And yeah, we are trying to access areas where we have high-grade silver along with lead and zinc. And we expect, for instance, in one of the mines called the Guadalupe, we expect to be producing more and more from that area, specifically because it does have the lead and zinc in it. And we produce a zinc concentrate as well, which will have a bit of silver in it as well. So we're trying to do it. Unfortunately, prices of metals respond fairly dramatically, and when you're mining, it takes you quite a while to actually respond in lieu of those prices. So
sure.
It takes time. We have to look on a long-term strategy, and we are moving into that area, but it can be glacial at times because you have to open up new workings, you have to drill ahead of yourself, you have to develop the process for handling that change in metal that you're putting through your mill.
Yeah.
But we're doing it.
Okay. And I know that you guys have another potential project, the Capire Mine project. I don't know if I'm saying that correctly. But if the price of silver were to rise back into the $20 range as we had in 2016 and stay there, how would that affect your view towards maybe bringing that project online and increasing your overall production?
The Capire is very interesting. It's where most of our mines are on what we call epithermal veins, and that is sort of moderate temperature, moderate pressure where the metals precipitate out. The Capire is a volcanogenic massive sulfide, and that's actually a volcanic plume at the bottom of the ocean. And as the minerals come out, it lays down on the surface of the bottom of the ocean. They get covered with silt, and then more. It feels a bit like a layered cake. And then obviously it's now risen out of the ocean at altitude. The Capire we did some test mining on it. We stripped it, prepared it when the price of silver was quite a bit higher. Price dropped, and we stopped. We have a mill there. The mill can be readily expanded. What makes Capire interesting is we've done a 43-101 on a very limited scale. We didn't even address the gold and copper in the Capire. We only addressed the open pit, and it didn't even include the extensions to the open pit, nor a second target which hasn't been drilled enough to even speculate on, other than it's very similar to the Capire. And a third target which is underground, which has even more potential, but we'd have to figure out how we're going to mine it. So price goes up, the Capire can be a major supplier of silver, and better yet, silver, lead, zinc, copper, and gold. And it would be a game changer if we get a decent uptick in the price of metal.
Okay. And approximately what percentage of that mine is silver? Is it still a primary silver mine, or does gold play a major part in that as well?
Gold is a major bump up in it. It's more of a journeyman type mine. It's not one of these very high grade gold VMSs. It's one of those that you call it a polymetallic. You've got several metals, and depending on where prices go, it can be anything from a copper mine to a zinc mine to a gold mine or a silver mine. And really what we're looking at is on the consolidation of all of those, how can you maximize recovery, maximize the dollars per ton. And the reason we're looking at over 20 is it's not a really high-grade deposit. It's just got the potential for size. And size is a wonderful thing when you're planning long-term.
Right. Okay, great. I think we're just about at the end of our time, Fred. I wanted to thank you so much for giving us an opportunity to have this conversation with you. I know that you're out at a conference today at Ernst & Young for Leadership Conference. I'll let you get back to that, but I appreciate your time and would love to speak to you again in the future.
Super. It's been good talking to you, Robert.
All right. Thank you so much.